We're going to get the spoken word now on the U.S. stock market for 2014 with our chief equity strategist, John Blank, joining me remotely via Skype from the West Coast. John, how do you think 2014 is going to start as far as our stock market is concerned?
Terry, I think January will see its usual rally. I think we're going to see bonus money flow into that stock market, and people look on the 2014 outlook and get a little bullish. And then we get Janet Yellen in the game in the United States, and that's going to cause the taper fear to show up, and people are going to start pricing in some kind of taper. And we all know what that means: with higher interest rates and slower housing markets and some drag expected. And obviously, the issue is, do they get it right, or they get a situation that gets out of control? And there's a fairly large chunk of warriors out there right now, Terry, that it's going to get out of control, and that's going to keep the market down a little bit, and it's going to create some soft spots.
Interesting. So you're looking for maybe a little bit of a rocky first half for the stock market?
Yes, I am. I think the first half of the year is going to be bullish, but I think there are going to be periods of worry and pullback on this fear, and we're going to have to deal with it, and it's not going to be rational. It's not going to be something we can plan for other than to expect. So sometimes to just have to price and play with the fear or stay away from the fear, and that's going to create rotation and downside every once in a while, and then we're going to get a rally back up. So I see some volatility coming into play with this taper fear.
What about sectors? What do you see sector-wise doing well at the beginning of the new year?
Terry, I still think you got to stay in a focus on growth, and I think that means IT that's priced pretty well. I think you've got to stay with healthcare, you've got to stay with industrials, and you've got to stay with the consumer discretionary names. Those cyclical areas are still having the stock market at their back, and you're still going to see the strong cyclical story that has to come with higher economic growth. It has to be the next wave of this market, and you have to stay there even if it's pricey.
You see a rise in M&A activity on the horizon?
I do, Terry. I think we're going to see some M&A. We got a lot of cash out there, and as soon as we get that GDP growth up, Terry, we're going to get the restoration of demand. That's the basin all these companies are waiting for, when they really see that they need to get in front of their competitors and get out there and position themselves well in a growing market. If that happens, I do think we'll see some M&A.
So what's the advice to investors then as they prepare their portfolios for 2014?
Bias to growth, bias to cyclicality, but not too much. And, leave some cash to the sidelines so that you can take advantage of the fear and the worry every once in a while. And I think also outside the U.S., stay more focused on advanced countries and stay less focused on, the deep dive value countries, because I think the fear is going to kill them even if they're doing just fine.
All right, the spoken word on the U.S. stock market for the new year with John Blank. I'm Terry Ruffalo.